Welcome back to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is Portfolio Manager Adrian Mastracci from Fee Only Financial Advisors, KCM Wealth Management in Vancouver. And we're talking retirement today, Adrian. A lot of people, a lot of Canadians in every corner of the country have planned their retirement around their real estate reality, the house. It's either paid for, close to being paid for. They've spent a lifetime assuring themselves of that relief, if you will, that insurance policy that real estate represents. How safe in 2010 is that strategy?
Well, there certainly is some risk in that. And I think a lot of Canadians certainly have their equity, a lot of their equity in their home. Some of it may not even be totally paid off. Now, if you're in Vancouver, you have one set of real estate prices. If you're in Montreal, you have a different set of real estate prices. So the person in Vancouver may look at his or her holdings and say, well, gee, I've got a fair degree of comfort in the value of my home.
Sure.
The only thing is, at some point in time, they have to maybe sell the home, mortgage it, in other words, get some money out of it somehow. They may have to downsize because they probably want to live somewhere. So these are the kinds of things that they have to start looking at and do it as early as they can, because there may not be enough time to do everything you want to do, get the price you want for that home, and still be totally retired.
Does your experience, for example, tell you that people who live in Victoria, Vancouver, with the astronomical housing prices we all have, are perhaps leaning or too dependent on that price reality to continue going up, 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 and are counting too heavily on the increase that may never occur? And I hate to be a doomsayer here, but we have to look at all the possibilities.
Well, certainly the possibility is that you may not get the price that you think that house is valued at. If that's the case, then you may not be able to sell for a while, in which case you may have to do something else until you get some dollars in your pockets. Or at the same time, you may have to say to yourself, maybe I just have to eat the cost and sell it at a lesser price. Hopefully you can sell it at a lesser price, but at some points in time, you just may not be able to.
You mentioned downsizing. I'm glad you did, because it occurs in the lives of a lot of people. The kids leave home, suddenly you've got this large property that you really don't need. That's a chore to take care of, and frankly is no longer where you want to be. You're probably going to make a few bucks and maybe a lot, depending on where you live. And then you're going to probably be able to buy something smaller for cash, with the difference, I would assume, going directly to retirement savings?
Well, that's right. That's what you hope for. Hopefully you've paid off all your debts by then. You don't have any more mortgages or loans or lines of credits. So at that time, you should be able to say to yourself, I can pull some money out and put it towards my retirement for good, have it only for that particular situation, and parlay it over time so that it does last at least to, let's say, age 85, 90.
And I'm glad you mentioned debt as well, because I would assume that debt is contrary or counterproductive to the whole matter of retirement strategy and retirement planning. So the idea would be, as you work out all of these formulas on how much you need to live, and we'll get to that in just a few minutes, but getting rid of debt is key to a successful retirement strategy, yes?
Yes, it is. What you want to do is you want to be totally debt-free by the time, actually before you retire. If you can be debt-free, get that monkey off your back, you will be in pretty good shape, given that you have accumulated enough dollars over time, given that you've saved enough, and you may still have to do that. Now, sometimes if you can't do it all at once, maybe you can get into a smaller job, or maybe a lesser job, and have some more dollars coming in as cash flow until you pay off that debt on your home. And once you do that, then you can say to yourself, now I can be totally retired.
A lot of people, Adrian, are listening to us right now and going, well, it's all very well and good, but you know, the recession hasn't been kind to me. I've had to forfeit some of my retirement income just to keep the heads above water in these trying times of the last 18 months. My nest egg isn't what I sure as heck thought it was going to be. and I'm getting closer by the day to retirement. How do you adjust to that?
Well, the way to adjust to that is there may not be a good answer, let's say, but you have to look at what the possibilities would be. For example, we just had a couple of years ago a large haircut on your investments. Well, a lot of people are still below what they used to have then, even after the run-up that we've had in the last year.
Sure, yeah.
So those people are certainly going to have to look at their situation, and it may be difficult. They may not be able to do it today, but somehow they may have to say to themselves, what's it going to take for me to retire? Am I still okay? And if I'm not, what's it going to take? How much more do I have to put into the saving stream so that one day I will have a sufficient amount?
We're talking retirement with portfolio manager Adrian Mastracci on this week's edition of the Money and Wealth Show. And after the break, we'll get to the nuts and bolts and the arithmetic of a successful retirement strategy. Stay with us.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.